Hi guys, it's Ekemini here. Today we want to talk about the best time frame for analysis because I get this question a lot. What time frame do I use for my analysis and what time frame is the best that I can really use for my analysis? This is actually the last video of the year that I'm going to upload to just help you, speed up things ahead of next year. So you understand that time frame matters and time frame sometimes doesn't matter, right? Now let's dive right into some of the things that you need to understand. As a day trader, you really don't need to get into trades on 4 hour time frame. All right, because if you look at, let's say, if you look at 4 hour time frame, you have under 4 hours before 1 hour. You also even have 2 hour time frame. All right, you have 1 hour time frame. Then you have 45 minutes. 45 minutes. You have 30 minutes. You have 15 minutes, you have 10 minutes, you have 5 minutes. Then, all right. So this is in the order of decreasing timing. Okay, so you look at these 4 hours, right? It's not really what you should use to time your entry. Entry and exit shouldn't be calculated based on 4 hours. Sometimes you might get into a trade on a 4 hour time frame like this. You realize that before you close that trade, it's going to take you a couple of days. Okay, it's going to take you a couple of days. Plus the type of market. Sometimes you might time an entry in 4 hour time frame. You don't expect to exit that trade within 5 minutes. That's not going to work. All right. Even if you enter that trade in 2 hour time frame, you'd also expect to exit that trade within 5, 10, 15 minutes or 20 minutes. Okay. You might be targeting a 2 hours engulfing candle or inside bar candle, but then it doesn't therefore give you the mind that okay, 2 hour time frame means my trade is going to run for 2 hours or it's going to run for 30 minutes or thereabout. It depends on your target because some traders do have higher targets and some do have lower targets. So this whole thing about time frame, I'm going to just focus it on day trading because I do day trading currently and I don't longer do much of swing trades. All right. So as a day trader, I want to tell you something that the time frame for your entry should forget about 2 hours and 4 hours, right? So after I cut out these time frames, I'm going to tell you we are going to go into it and then run some analysis. All right, and then I will tell you which time frame you should probably use as an advised time frame. It doesn't mean that it's a guaranteed time frame because I really don't know the type of day trader that you are. You might be a scalper. That's the thing. Not paid for this thing. All right. So basically, you can look at 1 hour time frame, 45 minutes, 30 minutes, 15 minutes, 10 and 5 minutes. Now, 1 hour time frame means that if you get into a trade on a 1 hour time frame, your trade can run for as long as 2 to 3 to 4 hours to 5 hours. You might get into a trade around, let's say, 8:30 a.m. in London session Nigerian time. So let's say that trade can run for like depends. It actually depends if there is no news. But if there is news, it depends on when you entered, right? And then probably where you want to exit. So let's go into charts and see something and see some of my trades. All right, so these are like my recent trades, okay, which I'm going to explain these trades and break them down for you all to understand. And then we're going to, have a look at how many hours each of these trades ran for. All right. Now, if you look at these sales I took on GJ here, right? This sale, apparently I took this trade here around I took this trade around here when this green candle was still quite dancing. Because the reason why I took this trade was because of this bearish engulfing pattern I spotted here. This bearish candle. I spotted this bearish candle. And then the moment I spotted that bearish candle, plus the structure of this market is, falling down aggressively. So we are having lower lows, lower highs, all those kind of things. All right, so we have lower highs, lower low, lower highs, lower low. So I apparently spotted it and I was like, okay, this is actually going to be a very good market to go on sales for. All right. So what I did was to just wait for the closing of this candle. Now, the closing of this candle, I was having this mind that I would open these sales here immediately it closes. But for a reason, I just had to wait to see what was happening. So by the time I opened my chart, I realized that the bulls were actually trying to pump this market towards the upside. Do you understand? They were trying to pump it. It's just a way of deceiving you that hey, it's going back to buy and you're having to buy. So they're probably trying to trap buyers on lower time frame, like 1 minute or 5 minutes time frame. But I already spotted the overall direction of the market. So what I did was to just hit on my risk to reward to I risked about 35 pips to get 130 pips. So, and then I got in. So this trade, I think if you look at this time, it was around December 3rd, uh, maybe around 10 o'clock, 10, 11. Yeah, I got into this trade on Tuesday. Now, this trade ran for, this whole trade, danced and danced. I think I got in here. So we'll start counting 1, 2, 3, 4. So it took 4 hours, right? I entered the trade 1 hour. It ran for about 4 hours. So by 10, 11, 12, by 1 p.m., which is 13, look at it now. It was already on TP. All right, that's one. Now that depends on market conditions. We had about almost four candles, right, forming. Okay. Now, after that, I think I also took another trade here around Wednesday, right? That's the next day now. Okay, so I took another trade here. This trade, which I understood something that the structure has already been destroyed. It's no longer bearish. It's actually trending up. So if I'm to go against the trend, it has to be very short. It has to be very, very short. Like counter trend has to be very short and precise. So look at what I did here. I risked 23 pips for 92, 93 pips, right? Let's just pay attention to how long it ran for, okay? So this guy ran for, let's say, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, about 17 hours. Damn. When did this guy hit TP? That's the next day, Thursday. So I entered this trade around, Wednesday, 2 p.m. or thereabouts, all right, around 2 p.m. So it hit TP around 12. It hit TP around 12 o'clock on Thursday. It ran for like 17 hours. Okay, so let's say we have two, okay, we have 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, that's the next day, 1, 2, 3, 4. All right, so it hits TP around 6 a.m., not 12 p.m. It hits TP around 6 a.m. Nigerian time. That's when we're approaching the opening of London session, all right? So that's when this guy hits TP. I held it for 17 good hours and then it hits TP. So what does this really tell you? What does this say? So let me just pause for a minute and go back to this. 1 hour time frame is not a scalping time frame. 1 hour time frame entry is not for 1 hour time frame entry. 1 hour time frame is not for scalpers. So what does 1 hour time frame represent? You people will not pressure me to go and subscribe this thing. No, I'm not doing it for now. The year has already ended. So 1 hour time frame means that if you get into a 1 hour time frame trade, it's for intraday. Intraday means it can run within the day and probably just cross to the next day, depending on when you enter that trade. Have it in mind that So anything above 24 hours is swing trading. So anything above 24 hours is considered as swing trading. Anything below 24 hours is considered day trading. So that means this trade ran for how many hours? It ran for 17 hours. It did not run for exactly 24 hours. I almost swing trade it. So we can't consider that a swing trade. Okay? It's still an intraday trade that ran for a couple of hours. It's not exactly, but then they will tell you that day trading is a trade that you hold that you close by the end of that day, that business day. Well, the trade, if it does not close that business day, I mean, the timing of exit is what I consider the time at which the trade ran for. All right. So that's the thing. So when you get into a trade around 1 hour time frame, using 1 hour time frame as entry, 1 hour as guide, I think you shouldn't put your mind on closing these trades within a couple of minutes because you're not going to have it. All right. And that's for that. So now, here we have another trade speculation. Aha, these guys are actually forcing me to buy this thing, and I'm not subscribing it again. My sub just exhausted for the year. Now, look at this trade. Do you realize what I have done here? I have actually started following this structure, this trend. But the funny thing is that this drop that happened in NFP, I caught it. But just that I didn't put the 2 there. I caught this drop. I caught this old drop on my MT5. I didn't use analysis tools. But that's that. Okay, right. Like, look at this trade now. Look at what's happening here. I'm actually trying to understand why some traders would actually hold their trade forever. They wouldn't want to let go. This thing is actually clearly showing me that it's around this time I'll start having the second. We are actually looking at head and shoulder. So by the time it's approached here, I should actually leave this market because anything can happen, right? Anything can happen. So this is around. This is where I'm looking at my take profit, and this is if you're looking this, if you're watching this video around Sunday, December 8th, 2024, just know that it's an expo ahead of Monday, December 9th, 2024. All right. So I'm actually looking at it that within this week we are likely to have a solid formation of head and shoulder for GJ, right? So now my entry is actually still around 1 hour time frame, okay? Because it's safe for me to get into a trade around 1 hour time frame. Now I'll still go back to entering trades on 13 to 15 minutes time frame. But then I'm looking at it that if I get in this trade, right? I think I already had set these tools down, but then let's see how long it runs for. It's giving me 1 to 1.54 weeks to reward, which it doesn't really matter. So you should also learn that making money is better than trying to count how many pips, because you should know how much of your money is going. You should also know how much of your money that you're likely to make. I guarantee you that when you stop saying, I got 500 pips, I got 600 pips, we really don't give a about that. All right, when you stop assuming that it is the pips that really matter, you will end up making more money. That is, understand that if you fund $100 and then you put $20 at risk, understand that if you come out of a winning trade with about $60, it pays more. That's you've caught about 1 to 3 weeks to reward. Then we really don't even want to care about how much pips you caught. We want to see the outcome. So put your mind in winning, in bringing money home. All right. When you go to the war front, nobody cares about how many times you shoot a gun or how many bullets you waste. What they want to hear is, did you win the war? Are you safe? Hope you were not shot. Hope you were not, you didn't step on something, an explosive. So there are things the people waiting for you at home are looking out for. If you go and start telling them, I my squad, we, I mean, just not even my squad, you start telling them that you wasted about 500 plus bullets before you won the war. Okay. Or you still tell them that you wasted about 1,500 magazines. Maybe magazine, okay. Magazine is not bullets. If you don't mind me. I'm just trying to explain something for you to understand. You wasted like 1,500 bullets, right? Magazine is what you put bullets into, right? You wasted about 1,500 bullets in the war front and you didn't still win. So why are you telling me? So you got about 1,500 pips with 0.01 or 0.02. You didn't make money. And someone managed to catch your 75 pips out of that 1,500. And then the person is making a huge amount of money. So you understand the difference about leverage entry. Entry is much, much more important. Exit is also very, very important. When you get in and when you exit, this person already knows his onions, and the person knows, I don't really hold trade for long. That's why we're going to this lower time frame. So let's go back to like the lower time frame thing. Let me bring back this analysis stuff on the screen so I'll be able to explain to you guys. All right. So now this is on 15 minutes. So if you're to get in, like, this is gold trade. Apparently you've seen gold in and out, right? If I'm to consider this trade, I would buy this trade, okay? Because one, look at this structure here on gold. This is what I can see on gold right now. And then seeing this, you might think, I don't actually work with what I think, I work with what I see. You might be thinking that this guy is actually coming down, but trust me, this thing you're seeing here is actually a flag. All right, it's called bullish flag. Because now this place has already shifted. This place has already been broken. This place has been disobeyed. Then this place I'm about to show you has also been disobeyed. This side, all this place has already been disobeyed by what? By this move. This is an impulse move. So this move you're looking at is actually quite a strong move. Let me use this. This move is actually quite a strong move. All right. Then this is like corrective move of it, and we are likely to have a continuation. So I need to change the color of this thing for you to see what I'm doing or what I drew there. All right. So this is what I'm trying to show you, that this move here is actually like the impulse. This is the corrective move, and this is likely to be the continuation. All right. Some might wait. Sometimes I would wait for this thing to break out of this trend, but gold can do otherwise, can break and still get back inside. So sometimes early entries is actually better for gold. So for me, this entry is on a 15 minutes time frame, and I would actually long this market. So if this market was to be active, I would go on a buy on this very spot. All right. So if I go on a buy, I will actually consider my stop loss a little bit below here, because if you bring it too close that I want to have a tight stop loss, if you've not traded good, you will not understand the behavior. I'll bring it down a little bit, because it can actually swing a little bit down and then take off again. So anything can happen. All right. So once it swings down, so where would I likely exit? Well, I'm not going to catch the entire move. Look at it. I want to exit this trade around here, around this spot. And why am I looking at that spot? Because the thing is, before this breakout will occur, once gold break out of this place, it has to break here. These are levels that it has to break. And look at it, it will break them with force. The moment it takes off, break here with force, it will touch here. Once it touches this level, it will dump small. All right. So this is like the part one of this entire tutorial. Catch 'em all.